Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, August 14th, 2012. Well, a continuation of the trend to the upside today. Here we have a candle that once again has made a higher high and a higher low. A small black body candle, and the black body denotes the sellers making net bearish progress. So that's a change in momentum from the previous day where the buyers had some upside momentum. We also have the market closing down towards the low of the day, and that suggests that the sellers took control of this market. For the previous day's trading, the buyers had very weak control. The buyers lost commitment above the 123.28 level. Today we've seen the sellers close with control, so there is potential for a change of trend back to the downside in this market for tomorrow's trading. We also have this very large shadow on the top, similar to the size of the shadow from the previous day's trading, and it represents downside price rejection. The buyers losing commitment as the market tested up roughly to around this 124 level. And we've seen the market now close down below the 123.28 level. Very important area, this 123.28 resistance, and it's been tested on quite a few occasions. Traded through there, and now it's holding as resistance once again. Just looking at this trend line and trend channel that I've drawn here, and if the market does trade down, then obviously we should be looking to some sort of support around this trend line. If we do see buying coming in down around there, then there is potential for a change of trend back to the upside, but no change of trend to the downside yet. We do need confirmation of that, but certainly the buyers have lost their momentum. They've lost any commitment throughout the trading day that they had previously attempted to build up. With regard to the Fibonacci extension, we're examining the relationship of the current first time frame uptrend to the previous time the market was trending up, and today once again price rejection from above the 38.2% level, which is an important level, tested almost to the 50% level, and this does set the market up for that potential change of trend to the downside. If we don't see confirmation of that change of trend, then we should be looking to the 38.2% once again, or the 50 or the 61.8% level to hold as resistance. And also with the Fibonacci retracement of the prior downtrend, we're seeing once again rejection from the 61.8% level, which could be quite significant. Confirmation of a change of trend should be looked for with a lower high and a lower low below the low of this current candle. But in terms of Ichimoku, we have a bearish market in the long-term time frame by trading below the cloud, but bullish in the medium and fast-term time frames by trading above the Kijun-sen and the Tenkan-sen. We should be looking here to the Tenkan-sen to provide some support if this market does test down to these levels, so coinciding roughly around this 122.87 area of support. We're trading at 123.04 with the Tenkan-sen, and then down to the Kijun-sen, which is trading around 122.41. That is pointing flat. There is a possibility the market will be attracted back towards there, so there is a chance that that we will see that lower high and lower low in place. If the market does trade up, we will need to trade above the 123.28 level. If we do have a bullish close above there, then I suggest we could see the market test up to around the 124.55 area, which will coincide roughly with the bottom of the cloud, and that should act as very strong resistance for this market. Above there we have resistance up around the 125.86, but anywhere within the cloud can act as an area of resistance. As we continue trading forward as well, we need to consider the dynamic resistance offered by the cloud here, and that level is coming closer and closer to the market as we continue trading forward. So the resistance for this market will be quite significant within the next few days, and very close to the market where it's trading at the moment, unless we have a breakout in either direction.